Well, welcome everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Glad to have you back. Good week in the market last week. Pretty strong. We'll be talking about that, what's going on right now. So let us get to it. Quick reminder that everything that we do here is for educational purposes only, not intended as investment advice. So what's moving the markets? Well, Moody's downgraded U.S. securities. So they feel like our debt now comes with higher risk as a consequence of the fact we've got so much debt out there, the tariffs and the impact that could have on the economy. And it's caused interest rates to move higher. So we've seen the 30-day Treasury go above 5%, first time in a while. Atlanta Fed President Mr. Bostic says he's leaning toward one rate cut in 2025. The markets got priced in more than that, as I will show you. Marks had their second best week of the year. The S&P last week was up 5.3%. 10-year Treasury jumped to 4.525, and oil settling down now in the low 60s. Pretty calm there. Market breadth from last week, pretty strong. Look at the advancers versus decliners on the New York Stock Exchange. 2143 compared to 682. Advancers 3334 compared to 1359. New highs versus new lows. 175 new highs, 63 new lows. On the NASDAQ, 334 new highs compared to 266 new lows. All of that, great news, bullish, terrific numbers. What to watch this week? Pretty slow news week. Today we've got leading economic indicators. Those will be coming out. Well, they did come out at minus 1%. We were expecting it to be minus 0.9, so not a huge miss. Tuesday, bunch Fed speak. Wednesday, little bit of Fed speak. Thursday, we get the initial jobless claims. We get that every Thursday morning. Then we'll have our services and manufacturing PMI numbers coming out, get a sense of how the economy is performing. And Friday, some more Fed speak. So not much that really looks like it'll be a market mover. The only catalyst that I really see for the week would be if we got any tariff news. Last week's heat map, boy, that's strong. Unless you're United Health, which has been trying to stage a bit of a comeback, but they got slaughtered. Their CEO walked out. Then it was announced there's an investigation against the company, and yeah, not looking good. Nvidia had a monster week, up 16%. Tesla, monster week, up 17%. But there are a lot of stocks that could crow last week. Meta 8%, Alphabet 8%, Amazon and Apple both 6.5%. Just a great week for the market. Year to date, much more muted, right? You look at the red and green and kind of a stalemate. And it's interesting to see Nvidia for the year is flat. Apple down 15%. Tesla down 13%. The aforementioned United Healthcare down 42%, Merck down 21%. Some of the big winners, Netflix has done great, GE, Philip Morris, all those been fantastic. Last week's winner, Supermicro, went up 44%. NRG Energy, 33%. For solar, 26%. Dell had a big jump. Tesla had a big jump. NVIDIA, Carnival Cruise Lines, Vistra, Lululemon, haven't seen them up near the top in a while, and Micron Technologies. So where is the earnings growth for this year? It's going to be in the Magnificent Seven. They're expected to grow earnings 17%. And it's interesting. It's like people have forgotten all about the Magnificent Seven in the last 6 months or so. There was the pullback. But look at the growth rate everywhere else. So the S&P 500, 9.2%. If you take out the Magnificent Seven, the S&P 493, 7%. So go where the growth is. Here's market sentiments, definitely improved. And you can kind of see. So on a 6-month on a weekly basis, they ask people, where do you think the market's going to go for the next 6 months? Higher, lower, are going to stay the same. And we can see those that are bullish have gone from 22%, 21%, 29%. Now we're at 36%, about normal. And of course, all of that is a result of market coming back, moving up 25% in 18 days. That'll do it. So how much will the Fed cut? Well, as of now, we're only forecasting 2 cuts for the year. One in September, one in December. So if you remember, there was a time not too long ago, we were expecting 4 rate cuts. Now we're down to 2. So let's just see how the inflation data comes in and, what the impact of this Moody's downgrade. I think that's all pretty temporary, personally. Sector returns year to date. So the S&P 500 is up 1.3%. And we have 1, 2, 3, 4, 5, 6, 7 sectors higher, 4 are lower. 2 of the 4 less than 1%. And the worst of the bunch, less than 5%. And the big winner's been industrial so far, followed by utilities. Take a look at the charts, see what's going on there. Pull up the S&P. Well, it just continues to kind of climb. It's rolled over a bit here recently, but the MACD is still green. We're well above our 50-day moving average. Moving average is now tilted upward a bit. RSI has been moving higher on balance. Volume has been moving higher. There's no denying it's been a wonderful comeback. I think the next couple of weeks is going to be interesting to see if we sustain this comeback. We're just a tick under S&P 6,000. We're 59.48. Pretty impressive. Where is resistance? Well, the highs were at about 61.50. So if we can get above that, breakthrough resistance, we could be off to the races. So we will see how that all pans out. But right now, things are feeling pretty darn good. So hopefully we can keep the ball rolling. We don't get any negative tariff news. And if we don't, I think we should be in pretty good shape. Because other than that, there's no real catalyst that I think is acting as a headwind on this market. But that's day to day. So anyway, great being with you again. I will see you next week. Until then, be safe, be blessed, and bye for now.